Alright everybody, welcome back into another backtesting session. What we're going to do now is trying to understand if, for me, for my trading style, having a better understanding more than understand. If from my trading style, from my weaknesses, it is actually better to enter always with pending orders rather than market execution. So now we are on the 31st of December. I'm going just to, it's not about, let's see if I can make money or not. Let's see what is the feeling that I have about these trades that I'm going to take. So, as you can see, we're starting really pretty randomly. Even if I think I know that the price is going up, but doesn't really matter for the purpose of this backtesting session. So let me just point out why I'm doing it. So first of all, what are my hedge versus the market? Even if I don't really believe that is a versus, still I want to try to understand. So my edge is based on what are my strengths. My main strength based on my inclination, based on my intuition, based on my knowledge and education. So my main strength is that I acknowledge and find, sorry for the keyboard noise, and find PLI, which stands for price level of interest. And I think I'm pretty good at it. Furthermore, my strength is risk management, because as for now, I know what is my stop loss. I know that I always have a target profit that is at least 2 to 1 for the partials and even more for the full TP. I know and I understand that usually, and this is something that if I try to this new method, it's something that I have to put in discussion as well. My risk management usually is I always lose less than full stop loss. So for example, if I enter, let's say, in theory, if I enter buys over here, let's say I enter buys over here. Now this is big. Okay. And I have like, this is New York, let's say 15 pips stop loss, 45 pips TP, 30 pips partials, first partials here. As per my plan, I should get out here at 6 pips of loss, because I mean this is very close, because there is a candle that is closing below my level of interest, which is 1812.5 in this moment. Now this is closing very close to my entry, but if the price went like this, I would have saved 9 pips just on this trade. The same, this is based on the point that, okay, I get out here with 6 pips. I can get out again in here again after I see that the price is staying above. The point is that even in this case, I will get out for like 6 pips and not a good 2 trades losses that are not even close to my only stop loss, which was like 15 pips, and would have given 1 trade going to TP. The same here, because the ideology behind it is that if the trade has to work, it will work straight away. So if I manage to enter here because I have a pending limit, pending order, and I enter here, of course, now the time requires a lot less stop loss. In this case, as you can see, the price never closed below my PSA, so it's fine, and then it goes to my TP. The point is, will I need to change something about it when I try to, okay, I'm here. Okay, let's see this. I have this price area of interest, but I am acknowledging that the price is moving in a bullish fashion because I have these continuous higher lows being printed, higher highs being printed. It's just that we're facing this area, this level, this PLI of possible rejection. But the point is, it's not my job to say that when it goes up, it will go at least 30 pips. So in this case, I acknowledge that the trend is bullish, that we are only facing this, let's assume it's still high volume time. What I want to understand is if I put a buy stop over there, and based on the session, I take I decide between a stop loss size and a TP size. Go, and we see the momentum is fine, it gets activated here. Do I have to get out here? When do I want to get out? Do I need to start doing it based on this one is now 20 pips profit, 15, so not yet at 20 pips of profit, and 18, 19. When do I want to get out? Do I want to get out at 5 pips? So have to decide one size or based on the market, or just take, okay, you can either go to stop loss or even go to TP. It's weird. So let's start and see. Trying to do some back testing. So now we know that the price is going to go back. This one would have been to list the partial TP. Then it retraces, goes back to our entry. So we are taking out at break even. Just these being needed. Okay. So we are still seeing a bearish structure, but a bounce exactly at the previous point. In this case, I would possibly, after this grab, liquidity grab, consider taking a buy limit, buy stop over here. 10 pips is more than enough. The going very small, close. I mean, there's no volume at this time, so it's not a lot. Okay, but actually, as you can see, this is the case. If I enter here, because at this moment, okay, why did you disappear? I don't know. Okay, okay, there he is. So we are here, and of course, in a bullish trend, also sort of making a nice trend line, a retest of the trend line and of the price sensitivity area, I would say, okay, if I now see the price again moving above this level, I will take a buy. So I place a buy stop. This is not a manual entry. I place a buy stop. Okay. Now this one is closing below, but it's still very low. I have to think if I want to take only like 5 pips, if the candles goes to 5 pips or not. Let's see. Now this one is 13 pips. Okay, but I have this candle close. This candle close is 2 pips. Do I have to get out? Or do I want to have 5 pips? It's hard and I need to understand. Now it goes to at least our partial TP. And it goes to our full TP, you can see. Again, we are here. Let's say we are here. We have this very recent ESA. Or even more interesting, we can consider all these highs, these candles reacted there. And we have this strong candle close above the PSA with the price making again, look here and here, making again new highs. Where I would like to enter is above this level. So I place a buy limit over there. We're still in a low volume. The entry will be exactly by the side, would be exactly there. 10 pips. Okay, there you go. Let's see. Okay, it gets triggered over there. Do I go out here? Do I go out here? Yes, I get out here. It's the 100% the choice. I mean, the trade is not working in my favor anymore, so I get out 6 pips. But where and when do I consider re-entering? Okay, I see the price here. I will still place, okay, buy limit above these candle bodies. Okay, buy limit above the candle bodies. Does not get activated. So if this one gets to be a rejection, by placing it above here, I'm not getting this fake out. Depend also of the spread of the time. If it's a lot, then I need to consider that I can go here, but the buy level, yeah, this is 1.4 pips. I have to place it like 3 pips above because I want to avoid it. Yeah, I want to avoid the spread. Okay, it goes to TP to gets activated. So now it's just in our hands. So now it's activated from there at this level. Okay, now this candle is closed or is going to change? Okay, this candle apparently is closed. Do I want to get out now again with 6 pips? This one was 13 pips. But honestly, it can still bounce from here. We have like 2 pips of range. You can still, but if I then start not taking these entries, not taking these stops out, then I might lose my edge, my risk management edge. Where is it? Here. Let me place this euro dollar so that it's always there. Okay. And this would be 1 and 2 trades already taken. You see, if I don't get out here, I lose 3 pips more than I should have done. So what? Let's see. Let's keep going like this. Okay. Is this one going bullish or is going to stay like this as it is? This is especially true because now if I'm here, I mean, I don't want to place the buy stops too early, especially after this strong rejection. I don't want to place it now because it can get activated any moment. I would like to see a bounce from here or even from this level, and then when the price is above here, placing the buy limit, buy stop over there. So let's see. This one is a strong confirmation of the price going below. So also at the same time, I need to have a possible thinking of a sell stop below here. Of course, not yet. Price is still reacting exactly here. As you can see, very strong bullish candles. Let's see if now we get some bullish. No. Okay, let's see now. If we get a candle closing here, I would have placed a buy limit because we are still in a bullish bias. But after this confirmation, then we can start to be absolutely on the bearish side. And where do we want to place, if we are here, where do we want to place the sell stop? We can either place it here, place it below the PPL, or below the previous area of interest. If I want to be on the safer side, I would place it below at the area of interest. This is a gold short. If it reaches there, it's fine. If it bounces, then we will see. We still keep to the either no trade range or to the look for buys. Okay. Okay. Of course, now we remove the pending order. We analyze and we saw that these possible price points could have given takeouts or some reaction, and that's why we didn't place any sell limit there because it was not a high probability. And we are going now to still be in our previous bias. Do I want to take buys over there? No, not yet. Let's see. There's a high volatility, high volume. There's low internet. Okay. If the price is going here, then I can consider placing a buy limit. Of course, when I say buy limit, I mean buy stop over there. If I place it 10 pips, more or less it's the same price level as before. Probably gets activated. Okay, and then let's see if it goes. Okay, we know now that we have this reaction point. Now we have also to consider, do we want to keep 20 pips as an arbitrary price limit, price level of taking partials, or do I want to consider the charts, what the chart is telling me? Because I acknowledge and find price levels of interest. And I know that this one can give us some reaction. So in this moment, I have two things to think about. One, is it more painful for me to have the after this rejection having the price retrace to my entry and possibly take a small loss, or is it more painful for me to take partials here, which is still 10 pips, 11 pips, and then see the price do that, let's say, and I think, wow, I took out 50% of my position for nothing. I just got scared by this price point, but it was not in my in control to see if the price was going to reject it. I think that on the safer side, it might be better to take partials. This is something that is very, very different from what I was doing now, because at least I have 50% in profit. I at least cover all the commissions, and I can take already the stop loss at like halfway through, put it at like 5 pips. Not break even yet, I guess. And let's see. At least I have 50% in profit. If I have like one lot position, let's say 2 lots. I have one lot at 11 pips equals $110. And I have one lot that can either go 30 pips or more plus, or one lot at minus 5 pips equals minus $55. So as you can see, I am guaranteed that this is $50. As you can see, I have a guaranteed profit, taking out the partials here and leaving it here. This is also another decision making, because I want to put it break even, and then maybe the price bounces from the PPL and goes out again, or what. So I think that it can be fine like this. This is a win-win situation, and I don't have to stick. If in this situation, then I can reduce my loss. I guess that is a win-win situation to take the partials at least 2-1 for my possible loss in the future. Because now here you lose 10 pips, now you get 1 pips. My position was too lot. Here I would have lost by this, as it is, I would have lost $200. But here, at least again, if in this case we go up to 10 pips and then we put the stop loss at the 5 pips, this is the same situation times 2, and we have a net of $60 for sure. And this one we will see. Okay, we get out at 5 pips. But still, okay, but now maybe, no, if the price goes up again, then I have all the time to place another buy stop. This is very good. This is a very good thing. And I have removed what? My entry fear. I mean, my was here because I acknowledged these highs. Would have still been here, would have been even more. would be like 14, 15 pips. And I removed the decision making of taking the entry here. Removing or where to enter. I'm based on momentum. The price, if the price wants to go up, yes. If it is not, I can, and I have a set. I can give you 10 pips of range where I'm taking the risk of taking a loss, because I know that on average, I will take 3 out of 10 times the 30 pips of range. Now we are taking it in a random. This is Asian session, not a lot of volume, but it's very important for doing a high volume sessions. So let's keep going. We are seeing still bullish bias, but now we have these price levels that got us a strong rejection. So I'm not saying that we're going to place a buy limit above here, even though it might be the case. If now we have some confirm that the price is rejecting here, we will have a break area test and confirmation of bullish bias. But if we zoom out, we can see, also we can see this, but we can see that the price is slowing down from a bullish trend. You can see making higher highs, higher lows. As you can see, higher high, higher low, same high, higher low, new higher high, new higher low, same high, higher low, new high. Here, as you can see, is the first sign, and this is another rejection, is another sign of price slowing down. Not saying that now is bearish, but the price is slowing down. And if we now see this movement, we can have still this bounce, and as I told you before, we can consider taking entries on the short side if this bearish trend is very strong, to take advantage of the possible range till the next level. So very good. Okay. So let's see where the price is moving. Zoom in a little bit. As you can see, I'm not even considering entering, because look at the size of the candles. Look how it is. Look at the size here and compare to this size. It's really, really low volume time. But if we are bouncing here, let's say is a high volume time, this would be a place for our buy stop. But as you can see, the price is going flat. With a bit of more volume, we might consider here, let's see how it would work. We know that the price is going here, but we don't know if now the price is going to give us 10 pips here to here. Let's see. Okay, so let's say we placed a buy there, and we're going to take partials over here. Okay, now the price is rejecting our price point. When do we get out? We still have a trade idea valid because the price is bouncing from this level here. But if I now see that the price is getting again rejected here, I can consider get out with a not with a small loss here, because now this is not validated, but place the stop loss blah 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 below here to say, okay, if we go here, I'm out. But let's see the very next candle. Okay, as you can see, price got rejected strongly, and I can consider getting out with like 7 pips. Ooh, as you can see, now this is one thing. We will still be in. We will go to our TP. Looks like not. Actually, we will take the full stop loss. Oop. And there it goes to our TP. So let's analyze this situation. So as per my edge, I will be out with like 5 pips, or at maximum these 7 pips. Of loss, fine. Then I will kick my ass because I see the price immediately going above. But now after this rejection, yes, I can still see that the price is making higher lows. You can see. If I re-enter here, now I know of course that it will be exactly the same. So I would need to take like 1. But in this case, wouldn't make sense to take the entry there. I will take the entry over here, above these levels, above these bodies. But if I take the entry over there, I will need to get out here with another 5 pips of loss at this bearish candle. So I will be already down 13 pips plus commission. And then how can I say, okay, yeah, go again, go again. Now you go again. And you go to my TP. How can I say it? $11 pips will not even cover 2 lots times 13 pips. And this is 11 pips times 1 lot, because I will take only the partials out. So that's quite messy. I don't know if I would enter here. This is just, okay, this is pre-London open. These are just low volume times. Let's get some more feelings out of it. Now, double tap. We are running with 5 pips. Stop loss, of course. And we get out with a small loss after taking part. Okay, but now the timing is here. We saw this rejection. We saw that the price is breaking below all our PSAs. And if we are here, now with this added volume, we can consider taking the short position below here. But let's see. Let's see how we could manage. We can manage it. Okay. The point is, I don't want to get triggered by some bullshit, some weak. But let's see. So we get activated. Doesn't close above. This one is not closing above. Price is getting back to our entry. And then it goes to our TP. Okay. this one, I will never take this entry. Probably, I mean, this low volume, I will not even take these three entries. Very, very low volume. But as you can see here, so you see this candle. Do you want to place them? You see the price is going up. Do you want to place buy limit, a buy stop over there? It's activated and immediately rejected. You are paying commissions for nothing. That's weird. That's a weird, very, very weird situation. I mean, I guess it's something that I need to take only when really trending price. Now we're seeing the price doing our break and retest. And it goes to our partial TP. And retraces to our break even. So we have partials and 20 pips. It's not a lot if you consider that every loss is a full loss and these wins are partials. But now, so what I need to avoid is just thinking, okay, price is very aggressive, let me place a buy limit over there. Now we are into volume time. So now is London. London made a lower wick and is now going strong. If I place a buy stop over there, let's see how it plays out. If it closes below, stays above. Okay, I will take partial probably here. Okay, as you can see, this one was a good trade because we are in a volume time. We go to 26 pips. And this is very good. Very, very good. Of course, I didn't even know this. We taken the entry and we price never closed below our PPL. Of course, now we have this rejection. And even here, if we are here. Okay, we want to place already a buy stop over there above this level, or we want a candle to break out and then very strong and then place. I want to reduce as much as possible the decision making. Okay, after this first rejection, what does this one will be activated? And now going to the loss. So I don't know. It's very weird. Let's see if we now bounces again. Okay. We're still seeing some bullish pressure. Okay. Let's see now. We want to place a buy limit over there. This is the purpose of backtesting, guys. Do I still want to keep it? Yes, we are bouncing. We are in a contraction. So if contraction, if it goes up, it'll be very impulsively. Okay, this one got activated and closed very bearish. Then it's going up. I still be in. Very, very sus. As you can see, there's flat volume. And this is also The point is there's no candle close. We are entering live candles. And this is not 100% good. And we are not, yes, we are going up, but it's not that volume that we want to be in. So it's very, very vulnerable to fake outs. Must stay. Coming into pre-New York, and we are rejecting the level. So would we consider taking an entry below here? Be 20 pips. If I buy, okay, if it goes there, I will take a short. Nope. No. Okay, we are back. I just had to refine the date. So we saw now this strong rejection. Is very option, but that's going bullish, but to be activated by too many fake outs. And then being able to get out as soon as possible, as soon as price goes below. But the trade idea is not invalid because the next candle can go. So I will need to get out. If it gets activated here, it's like 8 pips plus commission top of it. And we're trying to see the price action going down there after seeing this reaction. Okay, so as you can see, we don't have any confirmation of bearish trend. We are actually making support. We're finding support over here. This level of interest. We are recording, right? Yes. Okay, so now we are coming towards New York. Do I want to take a buy? Where do I want to take the buy? Do I want to wait the price to have a nice breakout and then place a buy limit? I think it's the best idea. Honestly, I think it's the best idea to avoid the fake outs. Okay. Nope. Doesn't close as we want. This is New York. But we miss this, as you can see. We miss this. Candle close. So with these levels, where would be the buy stop above the wicks? Be here, 10 pips. But it will be probably activated here with the spread. These are the moves that I want to catch with the buy stops. Place them. And I see this. In this case, when do I want to enter? Do I want to place it above here? This now has to be 15 pips. when do you exit? When do you get out? Here. This is a for free 7 pips loss. For free. Either you take the full stop loss, okay, we see a bounce, and we see, okay, above here, please. This is a very strong rejection. But the price is going up. You want to take it. Okay. You can enter here. We already have the partials in pips. And we get out here with the small stop loss at 5 pips. And we're now seeing lower highs being printed. Yes, this is good. And now what do we want to see? We're still bullish, but we're bullish above this level. Okay, so now if even this one goes very strong, now we are very, very at risks of getting very easily stopped out with a, not stopped out, activated with a just a week. Let's see. Okay, now we have the confirmation of the bearish bias, and we are possibly consider taking entries below this level. Okay. As you can see, we are out 99% of the time. Because we are activated here, and we're very, this is when we get out, like 8 pips. We are making, yes, I mean, yeah, we're bouncing from the support. And here, we want to take buys of this level. Nope, we're not seeing it enough. Okay, some bullish pressure, but we're running out of fuel of juice. But now we are going quite strong again. Activated, not quite working, but not very concerning on the bearish side. I take partials over here, 15 pips. Price is still going up. We're still in the trade. Of course, now we are at like 5 pips of a loss. But of course, I mean, it's like entering here, it's the same. And no, we are still in, and we're probably out over here after taking the partials at 15-20 pips. Okay, so the point is my edge of understanding momentum good enough? And especially the risk management. Usually I always lose less than the full stop loss, but if I lose less, I incur in a lot of small losses, as I showed you here. And the wins, I mean, the wins have to have full TP, I guess. But if I have the full TP, then I don't take advantage of this long trends, long impulsive moves. So I'm sort of cutting the profit too short when I need to balance all the small losses. Then I take big enough to cover if I have like okay. Okay, like this. We have this loss, which is 6 pips. And we have another 6 pips loss. Then we have another pips loss. This adds up to 6 2 lots each, equals to 6 pips is not 12 euro. This is 20, is 120. Is it 120? Is 60. 60 times 2. Yeah, so it's 120 plus 120 plus the 20 plus, let's say, $16 of commission. Okay, like this. Equals 360, 392, 398, 408 should be. Right? 120 times 3 plus 16. Very good. Okay. Then I finally have the winning trade, which is a nice and green. Okay. And this, in this case, it is we have 2 lots, but we have, no, I have to say the pips. So we take 15 pips and 15 pips, 15. But this 15, 2 lots, 1 lot 15 equals 150, 1 lot that goes to minus 5 pips equals 50. So it's plus 60 minus 16. 16 equals 44. Yes, it's a $44. So we are down a lot. So even if, yes, it's a 1 to 18, even if this one was 18, let's say this one was 18 pips, would be 180, 180, 230, minus 16, this would be okay, this would be 114. But we are still down, even if this one looks like a break even, we are still down more or less $300, which is 30 pips. Because I'm doing partials. If this one instead was 2 lots, completely at 18 pips, would it be 360 minus 16, would still be down, but much less. So that's why I need, this is a 25% win rate. But I can't allow myself to have this win rate. This is not enough. Okay, so let's go back. That's why risk management is very important, but it's very, very important not to take stupid losses. So the point is, if I get out here, down here, am I able to get at a good entry in time? You can see not even going to the full TP. Am I able to go into another re-entry after this huge downswing? Or it is better to just try and survive? Okay, so at this point, it means that if I am taking full 15 pips loss, let's say I have 50% of win rate, 50% here, and we take that this one 15, 15, 30 plus 0, 30 plus 0. Okay, so this one would be lots each, would be 300 plus 300 plus 32, 632. This one will be one lot 30, one lot 0, 300, 0 minus 32. So this is a $278 times 2. It's a 556, right? Okay, 556, which is still minus $76 as a profit. If instead, but this is counting with this plus 0, if it goes to 45, how often does it go to? Let's say one of the 2 times goes to 45. This will be 278, and the other is one lot 30 equals 45, lot 45, 45. Okay, minus 32. This, of course, will be a good, very good trade. It means it's 70, 28 plus 278. So it's a huge profit. So I only need This is 1006 6 minus 2. It's 374 total profit. And this is if at 30 pips I take this partial, so I have like 50%, and I have then 25% that goes to break even, and 25, which is 1 out of 4, that goes to full TP. Okay. But if instead, because I don't do that, I usually, let's do like this. What I do is usually this. I take, if this is 2 lots, 2 times 0.8 is 1.6. I take 1.6 lots, 0.4. I take 80% of it. So if I take 1.6 is 16 per pip, times 30 is 480, and then break even minus 32 is 448. This means that even if I take 80% and 30, and I have 50% full loss, 50% 30 pips, which is 2 to 1, and exactly 50% of 30 plus 0, then as you can see, it's still profitable overall. Because it's 448 times 2, 896 minus 6.32, 264 as a profit. If I have only 50%, if I have 50% of the time, when it goes 30 pips to 0, because I have these 80% instead of 50%. But of course now, if it goes to 45, the times that it goes to 45 is less. I gain less. This is 4 times 44. This is $4, and it's 180. As you can see, 480 is 660 minus 32, 628. 628 plus 448 minus 62. In this case, if I have also one of these winnings, I have 628 plus 448 minus 62, 444. This would be, of course, better than if I have on the 50%, 50%. And is still profitable when instead it will be negative if I add 50% at 30 pips and 50% at 30 pips. Okay. That's all to do. Let's see. Let's keep going. Now we're still bullish. We have this trend line. We have this level. Because now the volume is much less. Let's say I want that when it goes to 1828 up. As you can see, it will get activated and then take it out and go wrong. So go get stopped out, then going up again, and then low volume. Price is just bouncing multiple times from here, so we are still bullish. Now that I see a lot of bearish pressure, still staying above the PPL. Now staying also above this level. Okay, the volume. Of course, now we are very, very late, so that makes sense. But as you can see, we have this bounce. Now we are at the start of Asian. Okay, now we are starting with the real Asian. And if I see continuation, I will take some buy over there. Of course, if I was manual, I could take entries here. Or even think about placing a stop, buy stop over there. I mean, not even this one is working. As you can see, we would need to get out early. Now we are seeing bearish movement. For example, in this case, we got faked out from this move instead of not taking any loss in continuation of the trend. Now, actually, I can consider placing a sell limit, sell stop here. Let's see. It's going to work. It's activated. We have a retest. As you can see, price is not moving. We should get out here. But if we got out, we would have not even taken our 13 pips profit. Even more. Below. We're staying below this level, as you can see. So if you see here, we are staying below level. This is one of my edge to immediately see these things where we are reacting. We are reacting here, and now we see these very next candles are giving us confirmation that the price is staying below. And where we can take the risk of saying, okay, the price goes down here, it has a higher chance to go now back in trend. Okay, would be activated here. You can see it would make no sense to exit straight away. Especially if now then it goes to 10 pips. We're still in. Price is still reacting. Now we can go out. I think it doesn't make sense to take the full stop loss. But we will still miss some part of the movement. But I mean, this is always the same rule. If it doesn't work straight away, why should I stay here? Maybe not to 10 pips, Yes, 10 pips will still be fine. And take these 10 pips out, take what the market gives us. But as you can see, you just hold close to your TP. Now there's a lot of volume. Of course, now this was no volume time. If we were not here or here, so I don't remember all the very next candles. And we wait for pre-London open, so at 8 a.m. Go below, we want a retest, but we see the retest is going up. Okay, very strong. Where do we want to place realistically sell stop? Below here. Okay. This will also be like 10 pips. It's short. Activated. Okay, and now it goes immediately 20 pips. This is fine. We have a volume time and we have our level out at break even after taking the partials. Then we can consider again. We have the confirmation here. We can place more or less not immediately here because you see there are a lot of wicks, like here. Okay, doesn't get activated. We wait for London Open and we remove it. London Open is in 4 minutes. Very strong movement, the upside. Okay, the very next minute is London Open. So now, if we wait and we want to either take, because we're going to look before placing it here, or eventually our same price level is here, like before. Okay, of course we don't place them, but we start to look at them at our price point of interest. So we're seeing another rejection. In price staying below, we have the first bounce and gets activated. We get retracement, and either we take the full loss, we got activated here, and we reacted the 7 pips more or less at this area. So when do we go out? Probably around here at like 10 pips. 10 pips is fine because if we change our calculation, 10 pips is much better than 15. But still, if now we get out at 10 and instead it would have been fine, would have gone below, that would be more commissions for nothing. So let's see now if we want to see bullish price action, or maybe we are in a range. I see bullish pressure. I think about placing a buy limit, buy stop there. Of course, these will be PSA, PLI. Okay, we are staying above this level. Okay, we get activated. Okay, we immediately can take some partials. Look, this is 15 pips straight away. Price never went below our PSA. We can reduce to, we have 80% at 15 pips. We can reduce to like, I don't want to risk more than 7 pips. or even break even, depends on. Now we are at the first bounce. Okay. And if we are in this trade, we can possibly say, okay, we survived this, we went again here, we can either take another chunk. We have one lot, 1.6, 0.2. Now we have 1.8 profit, and now we have 0.2 that is running at 7 pips. So we have 32 $32 commissions. We have 1.6 times pips. We have 0.2 times. This one is 11. Now we can take 0.2 times 7 because it would be, let's make it quicker. It would be 16 times 15, 240 plus 22. This is 22. Equals minus 32 minus 14. It will still be $216 of profit. So it's absolutely fine. And we are reacting to the situation and not just sticking to fixed amount of pips. As you can see, and we get out with 7 pips of loss. But at least we have a partials in profit, so we don't care anymore. We have this bounce. Now, after this huge liquidity grab, can we place sell stop below here with some confidence? Like 8 pips range. Okay, wouldn't be the best entry, but we are still bearish. As you can see, this will be a very nice and very nice trade, staying our stop loss, risking the full amount of it. Or even better, as you can see, we could have placed a sell limit here. So we go back here, we remove this one. Okay, and we have now this PLI, the reference. Okay, we don't care, but we are still bearish. We have nice confirmations because the price is going to stay, as you can see, below the level. Jump here, we still have it. Okay, not the best, but we're staying below. Okay, gets activated. We're coming towards London Open, not New York Open, not the best. But when this is a minor drawdown, but not a single. Yes, we are above, but I mean, if our entries started at the PPL, we can't take any prices, any candle that goes up. So we have to take either the full loss or not. And as you can see, it goes to our TP straight away. Furthermore, we also have, if we want to be, we have also this possibility. I don't know if on the left we have something. If we are one below, we have the possibility of placing another one below this level. A very nice, good looking area. We're already in a very bearish side. We are very strong, strong momentum. If the price wants to make a double top but double bottom, yes, it's likely that maybe a wick will trigger it, then going straight away, and then we can cut the loss, so we take the full. In this case, of course, it's the best scenario ever. Okay. I hope you guys enjoyed. It was not easy. It's not easy. Trading is not easy. And it's another way of trading this one. It's about probabilities. Completely probabilities and full, as you can see, volume times. Trading when the price is in a good volume, rather than taking trades when the price is in a nasty range. You can see compared to New York and London. And I know what are the times with strong volatility and volume, so I might consider taking it. My edge, I have it. The risk management, I always lose. Max 15 pips. Might be. In this case, I cannot, if I place the limit here, I cannot exit at the first candle. I have either to take, especially if the stop loss is slightly below, I have to take this risk, then possible up. If then it gets triggered out, I mean, that's the basic of what is the stop loss. You guys.